This conference will now be recorded.
Here we go. Diane has scrolled to the memorandum that was included in your packet. This is for background only. As you can imagine, in light of the General Assembly decision on April 22nd, we've been working to put together procedures to conduct virtual meetings, which were not permitted under the Freedom of Information Act and Virginia's code for regional bodies before now. So this is just for your information. I'm going to move to read an opening statement that we've prepared for all of our meetings that we conduct virtually. And this helps bring us in consistency with the new code language on this topic. Since the governor declared the state of emergency on March 12, 2020, in response to the COVID-19 pandemic, state and local government bodies have been providing the continuity of government by meeting remotely by telephonic or electronic means in compliance with the Virginia Freedom of Information Act, the Commonwealth Emergency and other applicable laws, guidance provided by the Attorney General and their respective legal counsel. On April 22nd, the General Assembly approved a budget amendment to authorize all public bodies, including regional bodies, such as PlanRVA and the Richmond Regional Transportation Planning Organization, likewise to meet by electronic means without the physical quorum assembled together during the governor's declared state of emergency, as long as certain conditions are met, so as to provide for the continuity of governmental operations. This new authority became effective immediately upon passage. The 2020 COVID-19 virus makes it impractical and unsafe, even potentially life-threatening, for a quorum of this body to physically assemble in one location pursuant to the Virginia Code. Further, the virus makes it impractical and unsafe for the public and the agency staff to gather in the same location to participate in this meeting. Health, safety, and welfare of our community is of paramount importance. Therefore, we have determined the appropriateness and eligibility to conduct today's meeting electronically pursuant to the Virginia Code. The convening of this body has been determined necessary in order to continue the business of the organization. Matters included on this agenda address important or essential matters of continuing the work of government, and therefore it is appropriate to convene this meeting during this time. While we do not know the exact duration of the current practice of electronic meetings, we will continue to function in this manner until such time it is deemed advisable to return to in-person meetings. At this time, we expect meetings to occur in electronic format through the current declaration or June 10th, 2020. Staff has provided notice of this meeting and the means by which we are virtually gathered to members of the public. That notice was provided on Friday, April 24th, 2020 through posting on the PlanRVA website and distribution of email notification to members, alternates, and known interested parties, including the media. In order to comply with the provisions of the Virginia law and to improve accessibility to the discussions intended for today, this meeting will be recorded. Audio recordings of the meeting will be posted in the PlanRVA website within 48 hours of this meeting. Anyone participating as an observer during the meeting today may submit comments by email to planrva@planrva.org or by using the online chat functions of the meeting platform. Individuals who are observing by phone may be called upon to address the committee with their questions or comments. We ask that everyone identify themselves first when speaking so that we can more accurately record the activities of the meeting. All lines have been muted by the administrator to minimize additional noise and feedback. You may unmute your line at any time to request acknowledgement from the chair. Those who have signed into the online platform may request acknowledgement by indicating so in the chat function. Staff will be monitoring the chat and those functions throughout the meeting to ensure we don't overlook anyone wishing to participate. I'll now ask our clerk to certify that we have followed the approved procedures for appropriate notice of this meeting and the means by which we are convening. Diane, you want to indicate?
Yes.
Thank you. And then she'll call the roll. So if you would please indicate your presence by saying aye when your name is called during the roll call.
Mr. Blackwood, Ms. Gray, Mr. Holland,
Thank you. I had to unmute.
thank you. Ms. O'Bannon,
Here.
thank you. Ms. Page,
Here.
Mr. Peterson, Dr. Spagna.
Here.
So we do have a quorum. Thank you, Diane. Does anyone have any questions regarding the process for ensuring facilitation of public comment or participation from members of the public during this meeting? That concludes the opening statement. And I think we're on to item 1C, the meeting notes. This is just a summary of the call that we had in February. So it wasn't a meeting, but it was just the information that was provided to members that were available to dial in. I don't think you need action on this, just wanted to provide it for you for your reference.
Are there any questions about the notes? Questions or comments?
Uh-uh.
Okay, thank you. Turn the floor over to Ms. Eckhart to move to the next agenda item, which is a review of February and March financial statements.
Thank you, Dr. Spagna. Over the last few months, we have been working to condense the financial statements a little bit more. So we're using a newer format to kind of summarize these statements, but again, we're providing the old content format also. So for February, the month to date net income was $14,757. The year to date income is $92,365. Now comparing to the year to date budget in February, for the year, there's a positive variance of $63,153. Up under private on the income section, you'll notice a red asterisk. Underneath the financial statement net income line, you'll see two asterisks noting that a resolution for a budget amendment is forthcoming for 3 programs during the month of April 20. So this is due to true up the variance and realign the financial statements. Next, you'll see a graph depicting the net income projected versus actual. So again, the year-to-date net income through February is $92,365. So you'll see that we are operating positively and performing well over the year-to-date projected net income. Are there any questions up to this point?
Hearing none, let's move on.
Next, we see a fund balance projection for the month of February. Again, the blue lines indicate how the balances have increased over the course of the year. The orange represents what we need to meet the goal balance to get up to $1 million balance as of June 21's projected target. So again, because we're doing so well this year, we are moving closer to meeting the target. So
And to clarify, if you look at the labels across the bottom, the first 3 columns are previous for the entire previous year, and the 4th column brings us up to current. So you start seeing July, August, September 19. Those are monthly bars, if I'm reading the graph correctly.
that is correct.
May we continue?
The fund balance at the end of February is $960,302. Now, next we've prepared a graph to show what the reimbursement is for salaries because salaries is our largest administrative cost. In February, we were showing that 54% of our salaries are reimbursed. So the blue represents where we're at in actual cost. The orange represents what the budgeted cost is. You'll see in February that we did have an overage in salaries, and that's because we had a payout on a person that retired. That was Sharon Robeson. So we are also looking at discussing changing some of the verbiage in the way that fund balance is depicted. We were using the language other unrestricted, but when we were reviewing last year's audit, Hanover came back and wanted to change the verbiage to the unassigned fund balance. So we're proposing that we do the same in our normal routine statements, just so that that doesn't come back again as not being up to date with what the Governmental Accounting Standard Boards is actually using for the language.
So this is Pat O'Bannon. So is that what GASB says you're supposed to use that kind of language? Is that why you changed it?
There's 5 different definitions to fund balance in government. So our fund balance under GASB and our annual financial statement should be conveyed as unassigned.
This is Jim Holland. That's my understanding, according to Gatsby as well. Yeah, that's correct. I remember that change was made a few years ago when they changed governmental and non-for-profit accounting. So that's correct. So we should be
GASB 54.
That's correct. That was done a few years ago. I recall it very distinctly.
Mm-hmm. So that balance is not legally committed. It's not restricted by the board or any outside legislative agency in any way, which is great.
Yeah. In essence, what it's saying, this is Jim Holland again. In essence, what we're saying is that money is not dedicated to be expended per se. It's really unappropriated, unencumbered, if you will.
That is correct.
This is George Spagna. To reassure folks, they see these 2 columns and they see one number of just shy of $600,000 and the other column at $1 million. And which number are we actually using? There's about a $500,000 difference between those 2 columns.
The column that has $1,082,634, that column represents what is due and payable. The column that reads 566,317, that includes pension adjustments, any deferred inflows, any deferred outflows pertaining to pensions. And again, the 566,317 represents things that they include items that are not due and payable now, such as the pension and the pension annual adjustment, the GASB 68.
So the 96302 is what we previously reported on a single line and called the unrestricted reserve.
That's correct.
Yeah. We do need to make that very clear to the whole board. Otherwise, it looks like suddenly lost $400,000 someplace.
Absolutely, it should be very clear.
That's confusing, and I would actually want to hear that explained again. But yeah, now I see what you're talking about. Exactly.
So the agency is not required to set up a trust to incur the funding for these inflows and outflows that have to deal with the VRS adjustment. So those costs are not due and payable currently. It's a future actuarial adjustment based on mortality rates for employees and the average life of our current employees on staff.
Okay.
I'm sorry, I don't understand. You mean the 566,317 figure is if anyone retires, that goes into their VRS retirement account? What I don't understand.
There are some estimates included in other parts of that side that's listed on the balance sheet. If we go down further and look at the actual balance sheet, there should be two headings at the top of this balance sheet. The first column that reads February 29th, that is really the statement of net position. And in this statement, as I scroll down, in particular, we'll see line items in the long-term liability section. You'll see deferred rent, net pension liability, and deferred inflows. These items are, in particular, 2900 and 2950 are actually based on an actuarial evaluation that was done by a firm hired by VRS. And these totals take into account potential liabilities if our employees were to stay here on staff and retire. It takes into consideration mortality, the average mortality of the expected life of an employee. It takes into account their actual current age and health, and determines what a liability, what does that liability look like, and what we'd be required to pay out when they retire. But it's not due by us. We don't have to pay for this right now. And we're not required to put it in a trust fund right now either.
What the, unrestricted reserve was intended to be was to include, and I see some of this, but it was to include paying off, for instance, the rent. If we're told to go away, if the General Assembly dismiss, totally shuts us down, they could do that. And in other words, they shut us down and then say, start something else. That reserve was to pay off the rent. And that's a key thing. That what the 516,317 includes, because that was part of it, and to pay off employees. So am I understanding that that's what would have to be paid off to the employees if the General Assembly shut us down? That's really what the reserve is for.
If we have
the second column is the fund balance, Mrs. O'Bannon, that you're referring to, with regard to the reserve dollars the commission wants to keep on hand to be able to support any of those outstanding expenses related to lease for space or leave payouts, those, or frankly, any unforeseen expenditure. The column on the left is the column that shows how that balance on the right would be adjusted if we were to have to pay immediately the very long-term liabilities related to pension. And those figures are adjusted annually based on the performance of the pension program and on the actuarial calculations that Terry talked about. So I think Terry's sort of going over this in greater detail just because we wanted to make sure that everyone is focused on the right hand side column as it relates to our fund balance goal. Because the left column is very important and required for our reporting requirements, but the right column is where you see how our progress is advancing with regard to the $1 million unrestricted reserve amount.
It just seems it's a restriction on an unrestricted account. I mean, that's what I'm saying. There is, but I go back to if we were to disband, there would be the need to pay off the rent just for starters. So that's, I guess, what could be considered a restriction too. I'm just, okay. I think I will defer to Jim Holland.
Well, I was about to speak, Pat, in regards to that. I tell you one thing, we're looking really smart now with the decisions we made last year as a committee. You might recall when we said there might be a recession. Hey, look where we are now. So the decision to move up, some folk didn't want to do it, but I felt our committee, Canova's particularly, was stepping up and saying, hey, we should go ahead and do it now rather than later. And now was better. So I want to, when I look at the fund balance, that's what I'm looking at, the fund balance. And I see what you're saying in terms of unrestricted on the right there, Martha. I appreciate that. But the good news is the good news that we are moving forward and we're getting toward our goal. That's the great news. Would everyone concur with that?
Yeah, and ahead of schedule. I mean, I think that's what Terry was speaking to earlier.
Yes, yeah.
We would have projected that we would be more along the lines of $900,000 this time of year. And we actually, because so many of the jurisdictions forward paid that special assessment and the agency is performing better than expected, we're set to meet that $1 million goal well ahead of schedule.
Excellent. Thank you so much, Martha. That was my goal. That's what I'm so pleased about. So kudos to you all.
Sure.
Yeah.
I know Dr. Spagna raised this because it was something that Mr. Peterson wanted to do. It is, Mrs. Abandon, it is confusing how the financials have to be presented with regard to those long-term liabilities. And so we wanted to make sure that we start to talk about that each time we review the financials to distinguish the two columns so that we know that we're continuing to make progress in that second column for the fund balance.
If I could throw in another thought, future pension liabilities would be paid with future monies.
That's
It's
right.
not anticipated that it would be paid this year. As we continue to operate the agency, funds come in, and that's what we use in the budget to pay the pension liabilities for the current year. Is that correct?
That's correct.
Thank you.
This is Patricia Page. I would suggest that we give the simplified version of the explanation since we have so many new members that are just coming in, so they don't know the action that was taken in the previous years. So I think that would make it, if Ms. Urbana and I are having difficulty truly understanding it, I just think that we need to do a simplified version of that section with the explanation of what we did and the reason why. And that might help our new members as well.
Perhaps build that into the narrative report that goes out to the membership along with these financial statements.
Yes, sir.
Make it clear, essentially make it clear twice, because I'm sure it'll also be discussed at the full meeting.
Right.
Exactly.
Right.
I mean, that's just my take on it, I would think.
Okay.
Do we have anything else for February, or do we want to move on to March now?
Well, here we're just showing the format that we adopted last year. to provide some explanation as to why we had a positive variance. We did receive a scholarship for $2,000 from the Richmond Memorial Health Foundation, which lowered our program expenses, and we were under budget in professional fees by $2,088.
Well, just curious, what was the Richmond Memorial Health Foundation? What was that about, the scholarship?
Chet Parsons attended a conference on equity and transportation, and they reimbursed us for the travel expenses and registration for the conference.
Where are we? This is Jim Holler. Where are we in regards to printing? How's the printing line item looking? Because that was one area we had a couple of years ago concern.
Let's see.
Printing, documentation.
I'm looking on this line item detail now.
Mm-hmm.
It's 7230, Terry. It's on page 16, third line down. Mr. Holland, we're doing better. I would say also these financial statements for February and March won't show this because it'll really hit in April, but obviously with no one in the office right now, our printing expenses are very low.
Good.
Our printing actually is pretty much down to zero. I will remind everyone though that we have a lease agreement that includes a incorporated volume of printing assumed in that lease payment. So even though we haven't been in the office for about 6.5 weeks now, and so the printers have been basically not been in use, we're still paying for that minimum. Think about it like a water bill.
Sure.
You pay like a minimum amount, and that includes some level of consumption. We're not going to see the savings that we might all hope for in that particular line item due to being out of the office, just because that expense carries on. But I think Diane can correct us if I'm wrong, but I think we've been staying within our minimum each month and have not had to pay any overage fees for our printing costs.
Excellent. Very good. Just curious, Martha. Thank you so much.
Yeah, it's a good question. And I think we'll talk about that a little bit later with how our expenses have been affected by our current operating mode.
Thank you.
So at the end of February, we do have a positive budget variance for printing in the amount of $1,424.
Any more questions about February before we let her move on to March?
And Terry, maybe you can just hit the high points on March, since it's basically a continuation of the same good news.
Good.
Yes.
Good.
Again, we had an excellent month. We had net income for the month for $25,171. Year to date, we have a positive budget variance of $82,024. We do have some budget amendments that we're going to bring next that'll clear up this private variance column and the other column with the red asterisks. Here we can look at the graph to depict how we're doing with net income compared to budget. Again, net income year to date is $117,619, which is well over the year to date projected net income.
What was the projected net income?
The projected net income was it's $2,441,405.
Okay.
And that's year to date through March.
Okay. Thank you.
Here we have again the fund balance presentation through March. And we can see that the orange peak is shrinking again as we get closer to the $1 million fund balance target. The fund balance at the end of March is $985,556.
So we're within 14,500 of the target.
We are.
Mhm. Great.
So in
That's good news.
terms of salary, I'm sorry, Mr. Holland, did you want to say something?
No, I'm just saying that's good news. What George was just saying, that's good news. And what I was thinking of, are there any other localities that should be paying up? Martha, you can think of that should have paid up to catch us up that maybe did not? Were there any?
Yeah, good question. Powhatan and Richmond were going to be included. We're going to include their contributions for the special assessment in the upcoming fiscal year. Certainly, given what is going on, I am continuing to be in communication with them about their ability to do that. I believe Hanover and Goochland split their contributions over the 2 years. So they've paid half. So, I mean, we certainly have conversations to have with those jurisdictions, and my hope is that we could sort of work with each to do what they can, given what they're facing with their own budgets.
Sure, I understand. It is challenging.
I think the good news is through the efficiencies in the agency, we're going to meet the goal in spite of decisions at the local level. So, I mean, again, to your point about the recession, moving aggressively on this has allowed us to gain that ground before we're really feeling the impacts of decisions that have to be made around the recession.
Thank you. Great job. Kudos to you, Martha and team.
It's everybody, you guys included. You really helped us get focused on this. So.
Now, this graph again depicts our largest expenditure, which is salaries. And there is a 55% average reimbursement rate through March. So I will go, moving forward with the April statements, I will go ahead and change the headings on this balance sheet to say statement of net position to balance sheet for the month, so that the left-hand column is the statement of net position, and that column includes future liabilities, you know, in particular the 2,800 through 2,950, and then the right-hand side is the governmental fund, a true balance sheet, if you will, that is typically depicted in our annual audit.
Thanks, Terry. I think that would be really helpful. Thank you for doing that.
And we'll put some notes here on the side that can simplify, you know, when we made this decision to, you know, present the statement with the two separate columns and why. So we don't have to, you know, be confused each month. So fund balance at the end of March is $985,556.
14.4.
And here are our previously agreed upon statements in the packet to support the previous format.
So as a reminder, the committee members get the very detailed financial statements, and then we include them also in the board packet. You all had requested that the board members also receive the detailed statements. So both sets for February and for March will be included in the meeting materials for May 14th commission meeting. I think probably for time's sake, we'll ask Terry to review in detail the March statements, since those are the most current. But both sets in their full detail will be available in the meeting packet.
I think that's wise. If you don't include it, somebody's going to ask for it during the meeting.
Right.
So whenever we're ready, we can move on to the next item if that, unless there are questions about the statements.
Nope, I'm fine.
Hearing no objections, let's move forward.
All right. So throughout my limited time here at the agency, I've been trying to put some processes together to hopefully make them refreshed. So going through the budget guidelines, I'm proposing that we add a paragraph in our annual audit statement that speaks to our budgetary required accounting. So note 1 is what I am proposing to put into our annual audit statement, which basically it provides basic information, but I felt like it was necessary to add in our statements.
I wholeheartedly agree. I'm Jim Holland. You need to disclose the method of accounting such that it's accrual basis of accounting, how you would do it. Normally, the first note talks about the organization itself. However, as you point out, this is a critically important note that leads toward the other supplementary information in the report, the annual report. Okay.
And this note was actually taken from Central Shenandoah Planning District Commission's financial statements. I was reviewing their financials and comparing it to our document, and I felt that this was a necessary statement.
Now, I see note 3, if I may ask, Mr. Chairman. It says, well, accounting principles included in the generally accepted accounting principles. Do we not say governmental accounting principles, GASB? I know we have general accepted, but should they not be a governmental accounting principle since this is a governmental entity? What do you think?
If the question is addressed to me, I'm all for as much clarity as we can put in the document.
Yeah, I like the statement, generally accepted accounting principles. However, I'm curious as to whether it should be governmental accounting principles, GASB, because we in essence follow GASB versus GAAP, so to speak. Anybody agree or disagree? Just throwing it out for thought.
I'm not hearing any disagreement.
Okay, yeah.
I will see in the auditor's letter.
Ask the auditors.
Where
that's a good question.
They'll put that type of basis in their letter. This is basically saying we match revenues and expenditures.
That's correct. That's the accrual basis of accounting. Okay, I'm open to that, to how you want to do it, as long as it is as clear as possible.
So I think the hope is that for this first section, we would love to get endorsement from this committee with regard to the budget preparation guidelines. And Terry, is the expectation that this would get forwarded to the board for acceptance as well, or do you want to keep this as an administrative procedure? Or maybe that's a question for the committee.
I think that it should stay as an administrative item with this committee.
No objection from me.
So we could include this in your report if you'd like, Dr. Spagna, for the meeting, or we could just let them know that the committee is working on these operating procedures.
We'll let them know that we've agreed upon a format for the operating procedures.
Okay, great. Terry, do you want to move on to cash disbursements?
Well, I just wanted to finalize this document with just writing down what we're currently doing with our budget. When we prepared the fiscal year 21 budget, we are considering any unspent grant line items in fiscal year 20 would simply carry over to fiscal year 21. Any new grants that are awarded, we would put those on resolutions and come before the commission and get those awards approved for appropriation. And this would replace our mid-year budget review format that we previously used.
So basically, we would deal with this when it happens rather than waiting for this halfway through the fiscal year.
Right,
That's
and this is how local government operates. Okay, if we want to go ahead and move on to the cash disbursement procedures, and of course you can see that this was put together back in January. So just in a little bit in the background, our current bylaws require the treasurer to approve payments greater than $3,000. And the executive director can process payroll without review by a commissioner or the treasurer. The executive director authorizes the final payment of invoices. However, each program director reviews those invoices of their respective area before the executive director approves it for payment. Payments are processed twice a month on the 10th and the 25th. The cash projections are updated and a disbursements list is provided with that update to the executive director for approval prior to any payments being made. The payments approved list should then be provided to the treasurer for approval.
Now, I do have a question. Everything has a paper trail?
Yes.
Our internal auditor does a lot of this type of thing where he follows everything
Yes.
paper trail. That
That's
makes
right.
it easier for the final audit or the outside audit. So everything has a paper trail. Okay.
And
Now,
I think
since we've
one thing
been
that's,
working
sorry, Terry,
remotely-
can I interrupt you? Sorry. I think it's really important to go back to something that Terry said at the beginning of this meeting section, in that in the time that she's been with the commission, I think one observation that she's conveyed to me is that while we had these procedures that we followed, the actual procedures were not written down anywhere. And so we felt like it was important, as people move in and out of positions, and that we write these things down so that they can be, as Mrs. O'Bannon said, kind of trailed back through. So we're not necessarily changing our procedures, but we are documenting that this is how we do things here. And that's been, I think, a big part of what Terry's been working on for the last 10 months or so, is to make sure that what we do matches what we say we do. And in some cases, like the cash disbursement procedures, we didn't have this written down. It was just sort of passed down by person to person about how things worked. Sorry, Terry, I won't
No,
interrupt you.
it's okay.
I appreciate that. We had some concerns in Henrico and did a bigger internal audit for exactly that reason. People would go to lunch, for a meeting and then come back and not have a receipt, but put down that it costs $15. We demanded receipts. sometimes they took somebody else's receipt and Xeroxed it and sent it in. So what I'm saying is an actual paper trail of receipts and expenditures. Okay, thank you. Thank you.
Now, given the current mandated remote work situation, we are actually attaching documents in QuickBooks. QuickBooks is used as our accounting documentation system. We are actually incorporating copies of the receipts in all the transactions. The treasurer changes from time to time. An orientation concerning cash disbursement guidelines should be provided, but I have 3 bullet points to point out just 3 basic questions that need to be raised when you're reviewing expenditures. Does the agency have funds to pay the item? Has the agency worked with this vendor before? Do we know the organization? Are there any concerns regarding the amounts and the cost of the expenditures to be approved? Now, recently, we did increase the credit line of our SunTrust credit card line. Previously, only the executive director had a card. We now have a card that is actually an accounts payable vendor buyer's card. And this allows us to decrease our accounts payable processing cost. And in turn, we can earn 1% interest on using the card. As of today, the LGIP investment account is actually paying 0.7, if that. So we do have an advantage of earning a lot higher income rate using the credit cards. We do have several transportation employees that have cards, but I keep those cards locked up, and those credit limits are only $1,000, and they're for traveling, or if they have to go out to a meeting and pay for parking. And that way our employee does not have to bear the cost personally. And then again, turn in an extra receipt that would be managed, and that cost would be incurred and reimbursed through the payroll process. So it hasn't relinquished controls, it's just made a process that still requires the approvals, but it doesn't burden our employees personally for those expenditures.
And presumably when they use the card, when they give the card back to you to lock it up, they also provide the receipts for what they spent.
They do. Further, we are using ACHs more frequently because this serves as a layer of fraud prevention. We have a way to look at our online SunTrust management payment system before the ACH is processed. So we have that additional layer of protection at no cost. We also have ACH filters that allow us to put limits on the amount of the items to be processed. So in turn, even when I want to reinvest funds, I have to get the executive director's approval while we go through our cash forecast. Today, we put $350,000 back into the local government investment pool, and I have to go through Martha to get those those levels approved. She'll look at the updated cash flow and make that decision. I can't make decisions on my own. There's dual controls.
This is an editorial comment, but when you use acronyms like ACH and LGIP, it's probably advisable to spell them out before identifying. I mean, you just used local government investment pool, so I figured out that's what that was, but ACH,
I'm at clearinghouse. Thank you, George. I concur. There's always good ideas in case, someone may not know, but I've seen it so many times, ACH, actual clearinghouse, that it's just almost second phase. So I understand, Terry, where you are there.
Okay, great.
we use a lot of acronyms, both at
Yes, we do.
PlanRVA and the Transportation Planning Organization, so alphabets.
For the local, this is Pat O'Bannon, for the local government investment pool, is that where you put extra money in like overnight? Is that the one that's like that, or is this a longer term?
It's actually a longer term. We're required to maintain $20,000 minimum balance in our SunTrust government account. But we try to maintain just enough money in our accounts to make the payments on the 10th and the 25th. And, SunTrust is required to hold $1.25 for a government account for every dollar that the government has in the account. So on average, our monthly bank charges are only $90 a month because we are sweeping the accounts when we're able to and investing the funds back into local government investment pool. So basically on average, I
So
guess
I
we're
have,
writing one
excuse
check
me,
a month.
Patricia, I have a question. So when did you all start using this credit card?
We opened up the opportunity for our staff to have credit card access probably back in December. And we had the staff sign credit card templates, their policies spelling out what they can and cannot use the cards for. And there's an actual clause in this item basically saying that misuse of the credit card could result in disciplinary action up to termination of your employment.
Okay.
But we do
And
have
so are we paying our expenditures coming through the credit card as well? Because I haven't signed a check in some time.
they are, on average, we write one check every other month. And that's actually to Vita for our telephone expenses.
So who's signing that?
It's a $400 check. I'm actually dual signing items up to $3,000 with Martha, but we're only writing one check every 2 months. Everything else is ACH and credit card now.
But Terry, the expenditures, whether they're paid by electronic transfer or check, are still being signed off on by the treasurer each month. I mean, that hasn't changed.
We need to get back on track with sending that information to our treasurer.
Okay, so to Mrs. Page's point, she hasn't seen the credit card transfer payment because we haven't sent it to her, but we're supposed to.
And who's
Right.
the treasurer?
What I need to do, Martha, when you sign off on the cash forecast, in turn, I need to send it over to Ms. Page.
Yeah.
Mhm.
Yeah, we should still be getting that second sign off for any expenditure over $3,000. And then we've added a second sign off that's not required in the bylaws for expenditures under 3,000. Terry and I sign off on those internally. But the ones over 3,000 should be still processing through the treasurer.
Okay. Thank you.
Mr. Chairman, thank you for, I want to thank you all for documenting. I think that's so correct and important, procedures and policies. Absolutely right, because it's easy to lose this when you change personnel. and treasurers especially. Does it also note who receives the bank statement and therefore who also reconciles the bank statements for any ins and outs? You know, there should be a separate person. I'm thinking in terms of internal control here. Internal controls usually like someone separate to handle receipt of it versus person doing the accounting, him or herself.
Yeah, we should add that to the next round of procedures that we write down, Terry.
Okay.
Thank you. Yes, it should be documented so we know who's that person, then the position that person is in is responsible for that.
Okay. Thank you.
My suggestion.
Is everybody still doing okay on time? I know it's after 2 now, and we had scheduled this for 1 hour.
I
I'm
can
gonna
step in.
go into another meeting right quick.
How much more time do you need, Martha? How much more time do you need, George?
I think at the minimum, we'd like to get these budget amendments approved. The other items, I think,
We can do it later. Okay.
well, or I can send you guys an email as an update. I don't want to wait a month before we talk about next fiscal year's budget. But I could certainly provide that information to you by email, and you can communicate with me and Terry individually with suggestions and guidance on that.
Okay, thank you. Now, regarding the
We
budget,
need to hang on to a quorum so we can take action on the
thank you,
recommending
Mr.
to
Chairman.
the whole commission.
Yeah,
We've got several items here that need to pass from us to the commission.
that Terry just went through, those will be administrative procedures, but this next item, to your point, the budget amendments, that would be something that we'd like action from the committee to move forward to the next meeting for the commission.
And the recommendation is to
We'll get the
approve.
elevator speech version of what these are. I mean, if we can read them.
Yeah.
Terry, can you briefly, very, very briefly go over the budget amendments so that they know what
Sure.
they're being to approve?
There are just a few budget amendments. There are actually 3. And quickly, budget amendment number 1 is for the Partnership for Affordable Housing. PHA has provided us $10,000 to support affordable housing efforts. There's 3 bullets for the work to be performed, which you can see here on this document now. The contract period runs from June 1st of 2019 and was extended past December 31st. It's actually still ongoing. There's no local match. It's just purely $10,000 that we've already received. And the work is being performed by existing staff. Next is the analysis of impediments to fair housing, which is a $125,000 contract. This brought regional members from Colonial Heights, Hopewell, Petersburg, Richmond, and the counties of Chesterfield and Henrico together to meet a federal requirement. PlanRVA is to coordinate the first regional analysis of impediments to fair housing for the participating localities. The contract period is November 14th, 19 through June 2020, and the allocation is 100% federal from the participating localities, and the agency will receive up to $15,000 administrative revenue for project management costs. Finally, there's the Chesapeake Bay Regulatory and Accountability Program, which is a continuance of the Watershed Implementation Plan through the Virginia Department of Environmental Quality. The contract period is December 1st, 2019 through December 31st, 2020. The funding is $65,000, which is 80% federal and 20% local match. And the work is being completed by existing staff. The requested action is a motion to advance budget amendments with the recommendation for approval to the May 14th, 2020 Executive Committee and full commission meetings.
Mr. Chairman, I move approval of the requested actions.
I have a question, if there's a second. I'll let Patricia.
Thank you.
Is there a second?
I'll second it, but I have a question.
Well, now that we have a motion and a second, we're open for discussion.
Just the Partnership for Affordable Housing, isn't that PAH and say, why is it PHA?
Partnership for Housing Affordability. That's
For
their name. Mhm.
Thank you.
It's the group that you're probably familiar with that's led by Laura Lafayette through the Richmond Association of Realtors.
Okay, so then it makes sense. Okay.
And we have a motion and a second. Any further questions or further discussions? Okay, hearing none. I'm going to ask Diane to call the roll on this so that we have a record.
Okay. Another roll call.
Yes, please.
Mr. Blackwood, Ms. Gray, Mr. Holland, Ms. O'Bannon,
Aye.
Ms. Page,
Aye.
Mr. Peterson, and Dr. Spagna.
Aye. 4 ayes, 3 absent. The motion carried.
Thank you so much.
You are very welcome. Thanks for bringing this. Any further
Thank you.
business we need to conduct this afternoon? Ms. Page says she has to get to another meeting. Mr. Holland is waving bye-bye. So,
I'm waving at you.
okay. Thank you all for your time. At least we didn't have travel time to get to this, but it's still a chunk of time out of your day, and I appreciate you taking the time to do this.
Thank you.
We stand adjourned.
Thank you.
Thank you.
so much.
Thank you. Bye.
Bye.
Thanks, Terry.
Thanks, Martha. Have a great day.
We got it done.
Yes, we did.
So can we use the financial statements and just drop those into the next meeting folder?
Yeah.
Do we need to make a change to this, the procedures document? I didn't totally get where Mr. Holland was coming from on that.
We didn't.
Okay, so do you want me to just drop all of these into the new meeting folder?
Yeah.
Okay.
Sounds
And
good.
procedures documents, well, actually, maybe we shouldn't include the procedures documents. Like you said, we'll just leave that at the committee level.
I think we
And
should.
Dr. Spagna can verbally let people know that they've been working
Yeah.
through procedures with us. Okay. So I'll
Sounds
put the financial statements and the budget amendment, those two things in the meeting folder.
Good.
Cool. Okay.
Right.
Thanks so much. This was great. I'll see you
Bye.
later. Bye.
Bye.